Hi students, welcome to e-lecture of BCom Computers and General, first unit of Financial Accounting, that is Bills of Exchange. Okay, so I already told that in our second semester, the subjects are English, second language, basic computer skills for 40 marks, Financial Accounting 2, which we are studying with 80 and 20 marks, business law, programming with C and C++, computer paper. So our financial accounting 2 having 5 units, that is unit 1 bills of exchange, unit 2 consignment accounts, unit 3 joint venture accounts, unit 4 accounts from incomplete records, that is the single entry system, unit 5 accounting for non-profit organizations, that is non-trading organizations. Consignment accounts, single entry, non-trading, we studied at intermediate level. Again, those were introduced in the syllabus for non-commerce students. Okay, this is 5 units, and already I told you about the marks. Our subject marks are 80 marks conducted by university for 3 hours with 5 credits, and 20 are internal, 15 internal, 2 internals are there, 5 is for assignment. That is our financial accounting 2 paper. So what exactly the bills of exchange is? It is a written document containing an unconditional order directing a person to pay a sum of money to the order of certain a person or to the bearer of the instrument. Bill of exchange was written against the money due by buyer to the seller. Seller will sold goods to buyer and buyer postpone the payment. For postpone the payment, he assured a bill of exchange, which was written by the seller. In future, he is called as a drawer of the bill. So on that document which was written by the drawer or seller, which is in written with an unconditional order, directing the drawer is directing a person to pay sum of money. Drawer is directing a drawee. You have to pay the sum of money to me or to the person I ordered or to bearer of the instrument. So that is called bill of exchange, which comes under Negotiable Instrument Act 1881. This is a model bill and one more other model bill. Look at this. The amount was given, stamp it is, and duration of the bill is 3 months, which was mentioned in written also, and signature of the acceptor. Messrs. Agrawal Stores is acceptor. Acceptor in the sense buyer. Lakshmi Chand Sons is seller. So Lakshmi Chand Sons prepared a bill with an unconditional order directing Agrawal Stores to accept to pay sum of, that is 10,000 money after certain duration to him or the person to whom he ordered or the bearer of the instrument. This is explained with the help of definition. And content of the bill, date, look at the date of the bill. It was mentioned 5th May 2012, date of the bill. Another one is the term of the bill. In first sentence itself, the term of the bill was mentioned that 3 months. Date, content of the bill are compulsory, these to be there. Date, amount 10,000, which was given in numbers as well as words 10,000. Another one is the stamp parties. Look at the stamp here. Parties is accepted. Another one is a drawer. These are the content of the bill. So date, term, amount, stamp, and parties. These are the contents of the bill. Compulsory these to be there on the bill. Next, features of the bill. It is a written document signed by the maker and having unconditional order and to be pay money or money only. It has to be directed to pay money only, not other than money. And it should be specific, amount should be specific, and the time period should be there. And the drawee must be clearly mentioned. Name of the drawee means to whom he is paying. To whom he is paying has to be clearly mentioned in that bill. And it must be dated and stamped. So date is compulsory to define the term, and another one is grace days, and stamp for legal authority or legal sanctity. So these are the features. And parties already explained. Drawer who draws the bill. So in our known language, he is sold goods. Drawee who accepts the bill and return to drawer. In our known language, he is a buyer. And payee who receives the money. Here we have to understand one logic. Buyer accept the bill and send to drawer. Drawer is has to pay money to somebody. So drawer may endorse the bill to some other third party. So now the bill is with some other third party. That person will ask drawee or buyer to pay the money on due date because drawee signed or accepted the bill. So whenever the maturity date comes, he will receive the money. Third party will receive the money. So in this case, payee will be either drawer or some other person or bearer of the instrument. So there are three parties. One is the drawer, drawee, payee. Advantage of the bill is this is used for settlement of debts. Even banks or large organizations with huge amounts, they may postpone the payment or they sold goods on credit. For security purpose, they will accept the bills and send to the makers or seller. For time being, these amounts will be settled by payment against the bills. And we must very clearly known the date of payments to the drawee and the date of receipts also known by the drawer, because the bill must have date and bill must have a term. Based on that, we come across with the date of maturity. So by adding 3 grace days, we surely know the date of receipt for the drawer, date of payment for the drawee. It is a written and signed acknowledgement of debt. Okay, so the debts were settled through the written documents with stamp and signature. So that's why it is acknowledgement of debt. The debtor enjoys full period of credit. 3 months, 4 months time period was given. So the debtor is free. He need not worry about for the payment till the date of maturity. Once the date of maturity arises, then our debtor may pay the money. He will enjoy the credit period. And the drawer can convert the bill into cash by getting it discounted with the bank. So one facility to the drawer or seller is in between the credit period, if money is required, then automatically he will get discounted with the bank for getting the cash before the time period. Types of the bill: payable at side, on demand or representation, payable after certain time in the future. It is also known as a term bill. Means payable at sight means that is a check like that. Okay, so with a blank check which was written amount and immediately you can go to bank and ask about money. And if it is a post dated check, you have to wait for the time period. So that is the difference between two bills. Payable at sight means whenever it was presented, he has to pay the money, or whenever he asked by a sell drawer asked the money against the bill, drawee has to pay. And if it has a time period, duration is there. If the bill is having a time period, and after completion of the term only amount to be paid. So actually we have to record the journal entries are transactions in the books of drawer, drawee, and endorsee. Three parties are there. We learned and who is endorsee later. So all these situations, we will draw the journal entries and prepare lecture accounts if necessary in the books of drawer and drawee. Or if we asked in the examination only drawer, only in the books of drawer only. The situations are honor of the bill. Honor of the bill means on the due date, drawee will pay the money. Discounting the bill. Already we learn in advantage of the bill. If the bill is discounted with the bank, we have to pass one journal entry in the books of drawer. That is the situation. And dishonor of the bill. If the bill is dishonored, bill may be dishonored in three cases. One is wait till waiting for a time period. If the bill is discounted, if the bill is endorsed. Okay, in these cases, if the bill is dishonored, we have to pass journal entries in the books of drawer, drawee, and endorsee. Another one is endorsement of the bill. The bill was endorsed to the other creditor against the credit of the drawer or who is holding the bill. Renewal of the bill. If the on maturity date, drawee will approach the drawer. I will renew the bill by making a part payment, or I will renew the bill along with the interest amount of the past period or bill period. So any procedure will be followed or according to the drawee's convenience, and a new bill will be drawn. Retirement of the bill. So this is quite opposite to the renewal of the bill. If the drawee is having sufficient money, he will approach the drawer before the term period and asks, I am having money, I will pay the bill amount before the term of the bill or before the due date. So for that purpose, drawer will allow some rebate or discount. So he is getting money before the due date, and drawee is getting some amount discount for payment of money before the due date. So this concept, accommodation of bills, is a new concept or innovative concept of generating money between the two parties. So A draw the bill on B, B accepts the bill and draw the bill on A. A will discount the bill with the bank, B will discount the bill with the bank. Now A got money, B got money. After 3 months time period of the two bills, A will A will pay the money to bank which he accepted of the B bill, and B will pay to the bank which he accepted the against the bill of A. So for 3 months, A got the money, B got the money, and after 3 months, A honored the bill and B honored the bill. So situations arises when A is unable to pay the money, when B is unable to pay the money. So for that purpose, we pass journal entries. Okay, these are the various situations which we are going to pass journal entries. Few journal entries also I selected for your reference. Please note down and by heart. Okay, so bill retained till the maturity period. If the bill is having till the maturity period, drawer will receive the money, bank account data to bills receivable account. And the drawer will pay the money, bills payable account data to bank account. If the bill is discounted with the bank account data, discount account data to bills receivable account in the books of drawer, and there is no way concerned to the drawee. That's why no entry in the books of drawee. If the bill is dishonored on maturity, and we are reversing the journal entry. Earlier it is bills receivable to drawee account. Now we are returning it, reversing it with the noting charges. Drawee account data to bills receivable account to bank account. Okay, so he will pay the money to bank noting charges. And in the books of drawee, bills payable account data, noting charges account data to drawer account. If the bill is endorsed, drawee account data to endorsee account, and there is no entry in the books of drawee. That drawee account data to endorsee account is dishonored, that is bill dishonored. Okay, endorsed will dishonored. And another one is in the books of drawer, renewal of the bill. These journal entries are for renewal of the bill. Old bill is cancelled. Acceptor drawee account data to bills receivable account. Old bill is cancelled. Bills payable account data to drawer account. And part payment is received. Cash account data to drawee account. And part payment is made. Drawer account data to cash account. And if any interest amount is received, cash account data to interest account data to cash account. If interest is due, okay, interest account data, drawee account data to interest account, and interest account data to drawer account. And for the new bill, bills receivable to drawee account and drawer account data to bills payable account. We will understand this renewal of the bill. So A draw the bill for 4,000 rupees on B for 3 months. Now the bill is with A, B accepted the bill. 3 months is over and B approached the A, brother, I will pay 2,000 rupees. I cannot pay 3,000 rupees. I will pay 2,000 rupees. And for the 1,000 amount, interest amount and the part payment 1,000, I will accept a new bill. So that's why old bill 3,000 is cancelled for the 3 months time period, and 2,000 amount is received. And if interest is received 100 rupees, directly we will write cash, or if it is interest is due, we will write acceptor B account data to interest account. Suppose 100 rupees. Now out of 3,000, 2,000 is paid, 1,000 is principal amount, 100 is interest. If it is due, 1,100 new bill is accepted. Okay, these are the journal entries. Okay, so we will write. We already gone through the problem number 1, model problem or example problem. From the textbook itself, I picked 4 problems. So that 4 problems including journal entries I will explain. Look at the first problem. Short answer questions. These are short answer questions. On 1/1/2016, Ram draw 3 months bill on Shyam for 1000 rupees. So here date of the bill is 1/1/2016 and term of the bill is 3 months. Parties of the bill are Ram Dryer, Shyam Dry. Amount of the bill is 1000. So it was duly accepted by Shyam and returned it to Ram. On the due date, the bill was honored. Amount was paid. So now look at the journal entries. Journal entries in the books of Ram and Shyam. Ram draw the bill, Shyam accepted the bill and sent the bill to Ram. Ram is receiving the bill, bills receivable account data to Shyam account. Shyam is accepted the bill, Ram account data to bills payable account. Amount is 5000. Okay. Bill is drawn, bill is accepted. On the due date, the bill is honored by Shyam. On the due date, bill is honored by Shyam. Means Ram received the money, cash account data to bills receivable account 500, being bill is honored. And another one is bills payable is paid on the due date. So bills payable account data to cash account. Amount paid against bill. So that is the short answer question number 4, I think. Then coming to the 5, problem number 5. On 1st June, Ram drew a bill upon Krishna for 500 at 4th month date. On 1st June, date of the bill is 1st June. Ram is a drawer and Krishna is a drawee or acceptor. Rupees 500 is the bill amount. Duration of the bill is 4 months. This was duly accepted and payable at Canara Bank. After the acceptance, the bill was endorsed to Gopal. So here one more party is added. Drawer is Ram, drawee acceptor is Krishna. So the bill is accepted by Krishna and Ram is endorsed the bill to Gopal. He is called endorsee. Ram is called as a endorser. Gopal on the due date. The bill was honored. So acceptor is paid money 500. Now the bill is with Gopal. Gopal is received the money. Look at the journal entries with one more party. 3 parties are there. So now journal entries in the books of Ram, drawer, Krishna, drawee or acceptor, Gopal is endorsee. First time the transactions are between Ram and Krishna. Ram and Krishna. So Krishna accepted the bill. That's why Ram account data to. For him it is bills payable account 500. He accepted the bill and returned to Ram. Ram received the bill and that's why it is bills receivable to him from Krishna. Bills receivable account data to Krishna account. Bill is drawn and received and Ram account data to bills payable account. The bill is accepted. So the transaction between Ram and Krishna is over. Now the bill is with Ram. Ram endorsed this bill to Gopal. So the bill receivable is going out. That's why it is credited. Gopal is receiver, is debited. Gopal account data to bills receivable account. So now coming to the Gopal endorsee books. He is receiving the bills receivable. From Ram he is receiving. That's why his account will be bills receivable account data to RAM account. So on the due date, bill is honored. Krishna accepted his promise that I will pay after 4 months through Canara Bank. He accepted the acceptance. So he paid the money against the bills payable to cash. Now the bill is with Gopal. Gopal received the money, cash account data to bills receivable account. So now the bill amount was received and bill amount was paid in between Krishna and Gopal, and there is no journal entry in the books of Ram. He is no way concerned about the transaction of this one. Okay, that is with the NRC. Okay, right. Now coming to the fifth problem. Fifth problem is endorsed bill honored. Look at the sixth problem. Sixth problem is endorsed bill dishonored. Endorsed bill dishonored. So on 1st January, A drew bill on B for rupees 1000 for 3 months. Date of the bill is 1st January and term of the bill is 3 months and amount of the bill is 1000. Parties of the bill are A drawer, B drawee. B accepted the bill. Usually drawee accepts the bill. B accepted the bill and returned to A. After 10 days, A endorsed the bill to his creditor C. So now the bill B accepted and returned to B. A. Now the bill is with A. After 10 days, A endorsed the bill to his creditor C. Now the bill is with C. On the due date, the bill was dishonored and C paid rupees 5 as a noting charges. Problem number 5 case is endorsed bill honored. Problem number 6 case is endorsed bill dishonored. Okay, look at that. Now journal entries. Now first we will write the transactions between A and B. For A it is bills receivable account data to A account, bill is drawn. And it is B. Okay. And B is accepting the bill. That's why A account data to bills payable account, bill is accepted. So in between A and B, bill is drawn and accepted and returned to A is over. Now the bill is with A. A endorsed this bill to C. C is a receiver in the books of A. C account data to bills receivable account. BYE endorsed. And next, the bill is received by C. For him it is bills receivable account data to A account. BYR received. Received. Now the transactions between A and C. Now the bill is dishonored. So A will pay the noting charges. A will pay noting charges. A account C will pay the noting charges because A account data, bills receivable account data to bank account. Okay, 5 rupees were paid by C. Now, bill is dishonored by B. He has to bear the noting charges amount. So, bills payable account data, noting charges account data. Total his due to A is 1005 because of dishonor. Now, he has to receive 105 from B, and that should be liability to pay to C. He will pass one adjustment entry in his books, B account data to C account. 1005 rupees in the books of A. So this case is endorsed bill dishonored. Endorsed bill dishonored. Okay, now look at the short answer question number 7. Very simple. A accepted a 4 months draft 1000 drawn on him by B on 15th April. The bill was discounted with the bankers on the next day at 12% on maturity. The bill was met, means honored. And make journal entries in the books of A and B. A accepted a 4-month draft for 1000 rupees drawn on by him by B on 15th April. Date of the bill is 15th April. Amount of the bill is 1000. Term of the bill is 4 months. Parties are B and A. B is drawer and A is acceptor or drawer. Okay. Now we will pass journal entries. Journal entries in the books of B and A. B is a drawer. A is a acceptor. First word itself is telling that A accepted the bill. So now first one is bills receivable account letter to A account. Amount is 500. B account data to bills payable account. And the next one is it is discounted with the bank. That's why bank account data. Discount account data. To bills receivable account. B by E discounted. Okay, so we'll calculate discount amount. Discount amount is bill amount is 500. %. How many months? 4 months. We'll calculate a discount. 500 into 12%, 0.12 into 4 by 12. 20 rupees. So after deducting 20 rupees, we will get only 480 rupees. Being bill discounted. A is no way concerned with the discount of the bill. So on the due date, the bill is met by A. So now the entry will be right. Bills payable to cash 500 is paid by A, and that he will pay to bills payable. Bills payable is produced or sent by bank to A. So A will pay to bank, or B will collect the money from bank, will collect the money from A itself. Okay, 4 short answer questions we understood from the 4 points. One is bill honored on due date. Second one is endorsed and honored. Third one is endorsed and dishonored. And the fourth concept is discounted and honored. Okay, students.